Hello and welcome to Mint. I am Nasrin Sultana and this is All Things Markets. As we are just in the middle of the earnings season, it's the right time to do a check on how the earnings season have panned out. Also remember, there was a lot of expectations on the festive demand. Have this festive demand really met expectations? To understand that and more, I am joined by Mr. Mihir Vora. He is the CIO of Max Life Insurance. So Mihir, welcome to the show. So far, what has been your reading of the earnings so far?
Hi Nasreen. It's been an interesting season, I would say. On the 20th of September, when the government announced the corporate tax cuts, there was a lot of euphoria.
Right.
But after that, there was a spate of negative news and the markets really came down and the expectations kind of came down. So when the earnings season kicked off, there was a bit of a mixed expectation. But the good thing is so far the results have been not too bad. If you look at some of the segments like banking and financials, automobiles, the numbers actually have been as good or a little better than expected, I would say. Of course, only half the results are out
Right.
yet. We have some time to go. But overall, I would say that the season has been okay.
As you said, it's a mixed bag. Is it only because companies are paying lower tax now after the corporate tax was reduced? Or is it real growth that we are seeing? Because this was not the sentiment when we started the September quarter.
Yes. So far the positive surprises have not really been on the top line. They have been more on the margins, and in the case of banks and financials, more on the NPA side.
Right.
So, for example, if you look at the automobile segment, two-wheelers as well as cars, for some of the results that we have seen, the margins have actually been better than expected. In cars specifically, we had been observing that there were a lot of discounts being given out
Right.
over the last few months, and those were expected to eat into the margins. So while we have seen some reduction in margins, what has happened is that the companies have actually been able to manage costs better, and because of the global fall in commodity prices, the raw material costs actually have reduced.
Right.
So to that extent, the margins in automobiles have been a bit better than expected. On the banking side, there was a fear of some more corporate oriented NPAs coming into
Right.
the system, which has not materialized, at least for the first few large banks that have announced the results
Right.
so far. So I would say that it's not been a top line story, but more of a margin story.
Also crude, which is a very big factor for a lot of companies which are dependent on crude as their raw material, that was lower and it had fallen around 10% in the September quarter. Do you think that also kind of helped offsetting the, help gaining the margins?
Yes, that was more visible in the probably the FMCG companies,
Right.
where they use a lot of plastic based material for packaging, and to some extent in the paints industry that is expected. Yes.
Another big question that we all have been facing is the slowdown in the economy, mostly in the demand side. What is your channel checks saying? Is the festive demand as expected, as much as it was expected?
The automobile numbers seem to be better than expected. Probably even on the paints side, the demand has been better than expected in the Diwali season. But having said that, the market is getting a bit ahead of itself. The last few days we have seen auto stocks do quite well. But we also must realize that there was a lot of inventory buildup over the last few months, and there has been a lot of aggressive financing schemes launched by the banks and NBFCs and by the automobile manufacturers themselves, who have been giving the discounts. So there was this expectation of discount plus very aggressive financing, and there was also this expectation that GST on autos will be cut, and this expectation had been building up for many months. It did not materialize. So
Right.
this pent up demand of the last few months probably has manifested itself in the Dhanteras and the Diwali sales. We hope that these are green shoots and we hope that this trend continues. But one really needs to observe the November and December numbers to take a really comfortable call on demand.
Right. As you mentioned, we just started, we are just in the middle of the season of earnings. What is your expectations of the rest of the earnings season? Because we have big PSU banks waiting to announce their numbers. Also, oil and gas companies are still awaited to announce their numbers. What is your expectations?
A lot of the big numbers are out, the big IT companies, the big corporate banks, big retail banks, some of the big refining and petrochemical
Right.
companies. The numbers are out, so at least the big numbers are out. We have seen some positive surprises, as I mentioned. What one needs to observe or watch for is what's the trend in NPAs, for example, in the wholesale lending oriented mid-sized banks as well as the mid-sized NBFCs. So we haven't seen results from the NBFCs which are exposed to real estate, from banks which have been exposed to SME and some of the high risk accounts. We also need to see how the treatment of some of the housing finance companies which are under stress goes in the bank balance sheet. So I think the next half of the results is probably going to be much more of a mixed bag, and the positive surprises may be less than the negative surprises there.
Right. Any comment on the telecom sector?
So the sector continues to be under stress, and so this is a sector which is important not only from the consumer point of view, but also from the banking point of view, because if the demand of the government or the ruling of the Supreme Court is to be obeyed, then the telecom companies will have to shell out a lot of money in the next few months, which probably will be a difficult ask. So we need to really be worried about the banking system also, apart from the consumer angle.
So September month, September quarter, as you were saying, it's a mixed bag. What is your outlook for the FY20 earnings? We have still 2 more quarters to complete this year.
Sure. In FY20 earnings before September 20th, we were expecting about high single digit to low double digit kind of earnings growth for the market. But because of the tax cuts, we are somewhere between 15 to 20% earnings growth for the market. Having said that, what is more important is going to be FY21. And that will be a function of what we see panning out over the next few months. If the consumer demand does pick up, as we have seen in the last couple of weeks, then you might see another 15% growth for FY21 also. That would be our base case to start with. So the next couple of months, I would say, are quite important.
So after Diwali, markets have been on a roll, and a lot of expectations about new taxations or probably more favorable taxations by the government, especially after the assembly elections. Do you agree that markets are expecting new reforms or probably cuts in the personal taxation or other taxes?
So I'm not too sure about the taxation part, because there is limited fiscal leeway given the way we've seen sluggishness in GST collections. But definitely there are 2 positives which have emerged in the last 1 month. One is that directly or indirectly, there is clear acknowledgement that there is a slowdown. There is also acknowledgement that this slowdown needs to be addressed by structural measures, not only counter-cyclical measures like increasing the fiscal deficit. And the corporate tax cut was a big event, and my guess is that a strategic divestment of PSUs, further rationalization of, say, capital gains tax, not so much on the personal income tax levels, but say the capital gains tax for LTCG kind of for investors could be some of the options that the government would be looking at, because these are steps which will not have big fiscal impact, but a lot of sentimental impact for local as well as global investors. And right now what we need is the animal spirits in the market and the animal spirits of the business community to come back to the economy. So I think these steps of privatization, etc., will go a long way in bringing India back into the spotlight for investors.
Right. On that note, thanks a lot for talking to us.
Thank you.
So there's a lot of expectations build up for the next 2 quarters of FY20. But as Mihir says, that it's FY21 which is more important as far as earnings go. So far in the September quarter, earnings have been mixed, but there are a lot of companies which are yet to announce their results. We'll keep an eye on that, and we'll come back with more updates. Till then, stay tuned.